Welcome to our comprehensive guide on mastering the art of investment. Have you ever wondered what sets successful investors apart? What strategies do they employ to navigate the complexities of the financial markets? Today, we're exploring these 7 habits of highly successful investors. Each of these habits provides a key to unlocking unparalleled financial success. Whether you're a seasoned investor or just starting out, these insights will transform the way you approach your investment journey. Habit 1. Informed decision-making. Successful investors recognize that informed decision-making is the cornerstone of successful investing. This process involves thoroughly examining the financial and operational aspects of potential investments, including a comprehensive analysis of balance sheets, income statements, cash flow statements, and shareholder communications. They stay informed about macroeconomic indicators like GDP growth rates, unemployment figures, inflation rates, and central bank policies, understanding how these factors can influence market conditions. These investors also pay attention to the management quality and corporate governance of the companies they invest in. They look for companies with strong ethical leadership teams who demonstrate a clear vision for growth and a history of delivering on their promises. Additionally, informed investors use a range of tools and techniques, such as fundamental and technical analysis, to make educated predictions about future market movements. They're also adept at using financial modeling software to run various scenarios and forecast future financial performance. In summary, informed decision-making is about gathering a broad spectrum of information, analyzing it with precision, and making decisions that are rooted in a thorough understanding of both the micro and macro aspects of investing. Habit 2. Long-term planning. Investing with a long-term perspective involves understanding the time horizon and being patient for investments to mature. It's about resisting the urge to react hastily to short-term market fluctuations and focusing on the bigger picture. Successful investors set clear financial goals, whether it's saving for retirement, building wealth, or generating income. They understand their own financial needs and risk tolerance and design their investment strategies accordingly. These investors also embrace the principle of regular savings and investing, often utilizing techniques such as dollar cost averaging to build their investment portfolios over time. They recognize that markets will experience cycles of ups and downs and plan their investments in a way that can weather these cycles. This might involve a mix of growth and value investing, investing in different asset classes like stocks, bonds, and real estate, and continuously rebalancing the portfolio to maintain the desired asset allocation. Habit 3. Risk management. Risk management is a multifaceted approach that successful investors use to protect their investments. It goes beyond diversification. It's about understanding the correlation between different investments and how they come together to form a cohesive portfolio. For instance, during times of stock market volatility, bonds might provide stability, or during inflationary periods, assets like real estate or commodities might offer protection. Investors practice prudent risk management by setting stop-loss limits and using hedging techniques like options and futures to protect against downside risks. They also stay vigilant about the liquidity of their investments, ensuring they can access their capital when needed. Moreover, successful investors keep a keen eye on geopolitical developments, technological advancements, and environmental, social, and governance or ESG factors, understanding how these broader trends can affect their investments. Habit 4. Emotional discipline. Emotional discipline is about maintaining a level head in the face of market volatility. It's the ability to stick to a well-thought-out investment plan and not be swayed by the euphoria or despair that can grip markets. Successful investors avoid herd mentality. They don't buy stocks just because everyone else is buying or sell in a panic when others are selling. They maintain a long-term perspective and understand that market corrections are a normal part of the investing process. These investors also practice self-awareness, recognizing their own behavioral biases, such as overconfidence or aversion to loss. They create investment strategies that account for these biases, often automating certain aspects of their investment process to avoid emotional interference. They understand the importance of taking a break from constant market watching, which can lead to overtrading and impulsive decision-making. Before we move on into the next crucial habit, if you're gaining value and insights from this discussion, please take a moment to like and subscribe. Habit 5. Continuous learning. The world of investing is dynamic, with new products, strategies, and regulations constantly emerging. Successful investors dedicate themselves to a lifetime of learning to stay ahead. This might involve enrolling in finance and investment courses, attending industry seminars, and reading extensively on economic and financial topics. They also stay current on technological advancements in the investment world, such as the emergence of robo-advisors, cryptocurrency, and blockchain technology. Continuous learning also includes learning from one's own experiences and the experiences of others. Reflective investors regularly review their investment decisions, both successful and unsuccessful, to understand what worked and what didn't. They seek feedback from peers and mentors and are open to new ideas and perspectives. Habit 6. Adaptability. The ability to adapt is crucial in a rapidly changing investment landscape. Successful investors are not rigid in their thinking. They're flexible and open to changing their investment strategies when warranted. They stay informed about market trends and economic shifts, ready to reallocate assets or modify their investment approach in response to new information. Adaptability also involves being open to new investment opportunities. Whether it's emerging market equities, green energy stocks, or innovative technology companies, adaptable investors explore various avenues to enhance their portfolios. They understand that diversification is not just about investing in different asset classes, but also about exploring new investment themes and sectors. Habit 7. Networking and mentorship. In the investment world, networking and mentorship can open doors to new opportunities and insights. Successful investors actively seek connections with a diverse group of individuals, from fellow investors to industry experts. These connections can provide valuable information, different perspectives, and potential investment opportunities that might not be available through public channels. Networking involves more than just attending events. It's about building relationships based on trust and mutual respect. Successful investors are also willing to share their knowledge and experiences, understanding that mentorship is a two-way street. They may join or form investment clubs, participate in online investment forums, or engage in mentoring relationships, either as a mentor or mentee. Common investment mistakes. While cultivating these habits, investors must be mindful of common mistakes. Overtrading, timing the market, following herd mentality, emotional investing, ceasing to learn, inflexibility, and investing in isolation are pitfalls to avoid. By recognizing these errors and actively working to prevent them, investors can further align with the habits of successful investing, enhancing their decision-making processes and paving the way for long-term financial success. In conclusion, by integrating these 7 habits into their investment strategy, individuals can enhance their ability to navigate the complexities of the financial markets and achieve their financial goals. These habits are not just about technical skills, but also about mindset, behavior, and a commitment to continuous improvement. They are the hallmarks of investors who not only succeed in the market, but also find fulfillment and growth in the process. Remember, if you're enjoying this content and want to keep up with the latest in investment strategies, make sure to hit the like button and subscribe to our channel. Your support helps us bring more valuable content your way.